Ladies and gentlemen, good day and welcome to the Q4 and FY22 earnings conference call of Gati Ltd, hosted by Equirus Securities. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dipesh Kashyap from Equirus Securities. Thank you, and over to you, sir.
Thank you, Lizanne. Hi, everyone. On behalf of Equirus Securities, I welcome you all to Q4 and FY22 earnings conference call of Gati Ltd. We are pleased to have with us management team represented by Mr. Pirojsha Sarkari, Phil, he's the CEO, and Mr. Anish Mathew, CFO for Gati Ltd. We'll have the opening remarks from the management followed by a Q&A session. Thank you, and over to you, Phil, sir.
Thank you, Dipesh. Good afternoon and a very warm welcome to everyone on our Q4 and FY22 earnings conference call. We have uploaded our Q4 FY22 results presentation on the stock exchanges and company's website, and I hope everyone had an opportunity to go through the same. As mentioned, along with me, I have Mr. Anish Mathew, Chief Financial Officer for Gati Ltd, and our investor relations team. The year gone by was the recovery year from the impact of COVID-19. We have observed that the logistical requirements and services, especially from the organized players, have increased during and post-COVID-19 period. Despite challenges during the period, we have been able to realign our systems and processes as per the requirements of the business and have been able to manage it very efficiently, keeping in mind all the safety requirements of our people and customers. We have been able to maintain our share of business in the express distribution and simultaneously offer customized logistical and supply chain solutions to our customers with enhanced integration of technological advances.
Ladies and gentlemen, the lines of the speaker has got disconnected. Please stay connected while we reconnect the speaker. Ladies and gentlemen, thank you for patiently holding. We now have the line for the speaker reconnected. Over to you, sir.
Okay, sorry about that. So now let me start by giving some insights on the logistics industry. Logistics remains an integral part of the overall development of the economy. We have been seeing higher emphasis by government on improving the logistics network of India by creating the right infrastructure and policies for the overall benefit of the industry, with key emphasis on bringing the logistics cost down as a whole. Currently, India's logistics cost is as high as around 14% of the GDP, which the targets are to reduce to 10% over the next 5 years. This reduction will be led by multiple initiatives like good infrastructure, increased compliance, and efficient digital backbone, whereby organized players would slightly have an upper hand as they would focus on reduction of indirect costs like pilferage and wastage, inventory carrying costs, and reduced time in transit by better utilizing the logistics network through scale and efficient and lean tech-based operations. The Government of India has also announced PM Gati Ltd, the National Plan for Multimodal Connectivity. This initiative, essentially a digital platform to bring roadways and railways together, holds tremendous potential to enhance logistics infrastructure and consequently reduce the logistics cost. We have been building capabilities in various areas in our organization to capture a dominant share of this market shift from unorganized to organized players. The generation of e-way bills, which are now hitting a monthly run rate of above 7.5 crores versus financial year 22 monthly average of 6.5 crores and 5 crores in FY21, is a testament to the above theory. Talking about the current quarter, January 2022 realized India's highest single-day rise in infections in the third and ongoing wave. Delhi experienced some disruption in regular operations due to night curfew, state government restrictions, and others. Following which, over January and early February, consumption and restoration of inventory were impacting our revenues in a large way. Having said that, there has been surge in volumes and revenue from March onwards, which was one of the highest monthly run rates for us. Gati, being the pioneer in the express logistics business and network leader in logistics, with almost 99% of government-approved PIN codes covered and almost 670 offices across India, with our wide reach across multiple locations and hubs in various parts of the country and deeper customer engagement, we are very optimistic for the future. FY22 also marks 2 successful years of all cargo acquiring Gati. We have successfully covered pillars of A, debt reduction, B, capture market share loss, C, defocusing on non-core assets, and D, attract industry's best talent. Entering FY23, we have embarked upon Gati 2.0 transformation journey, which I would believe and brief as follows. We have specifically laid out 5 key aspects for our Gati 2.0 journey: digitization, sales acceleration, infrastructure, operations, and increasing talent pool. Digitization. We are automating number of processes, back-end infrastructure, front-end communication, which enables faster execution and decision-making. Our proprietary software GEMS 2.0 will integrate many major functions like finance, CRM, and management data for report generation and performance analysis. This would further lead to ML AI related decision making, for which we now have a focused team in place. The team focuses on route optimization, faster turnaround capabilities, which would accelerate from year on in FY23. Several tools like our Gati Genie chatbot, digital payment solutions, an organization-wide ERP system, robust tracking systems, and sophisticated software powered by Salesforce for CRM and automation are being implemented for seamless movement of cargo. Our sales acceleration strategy is playing out well, and we are able to capture more and more MS accounts, which will add up to overall growth of the company with better margin profile. With our focus on the key accounts and adding more and more wallet share from these accounts too, we are also able to acquire few new large accounts which can become potential key accounts in the next 2 or 3 years. Alongside MSME, customer addition is also encouraging. We have set up a new sales structure focusing on cluster-based approach for MSME. Our key focus area would remain SME/MSME segment, which is the second largest contributor with 21% for financial year 22. Sales acceleration has 2 levers to play. One is accelerating volume, for which we are now ready with our enhanced infrastructure capabilities, and second one is on yield management, for which we now have a separate team in place. The team has initiated renewal of contracts for KEA, which are realizing an average price hike of 5 to 7%, expected to roll out in this financial year. We have been building state-of-the-art infrastructure. In December 21, Gati launched its largest surface transshipment center at Farrukhnagar, spread over 1.5 lakh square feet and connecting to all major national highways. With no inconveniences of congestion, the STC has been designed in compliance with green norms. The facility has been equipped with capabilities to process short-haul cargo deliveries in North India as well as long-haul cargo movements on a pan-India spread. The next 2 hubs with similar facilities and scale will be operational in Mumbai in the first half and Bangalore in Q3 of financial year 23, followed by Nagpur, Indore, Hyderabad in later FY23, and of course Cochin and Pune in FY24. Under phase 2, this network would then be propelled with automation capability. We have been working in tandem with our IT team to simplify our operations to accelerate the margin. We've been working on focusing on reducing cost per kg, more engagement with customers for wallet share addition, customer retention and new customer acquisition. Efficiently planning our infrastructure and hubs to manage flex and peak capacity, thus increasing throughput and achieve scale. Lastly, we have been able to retain and add more and more to the talent pool at Gati at all levels in the organization, giving us long-term sustainable growth visibility. In the years gone by, Gati has launched an employee stock appreciation rights plan. We believe that this would foster our group culture of entrepreneurship with a purpose, and each employee would work towards unified goals of building Gati a stronger brand. The board has also discussed its rationale for evaluating structure of related businesses to align with strategic objectives of simplicity, greater financial flexibility, sharper capital allocation and strategic independence. Basis which the board has approved evaluation of restructuring options and appointment of consultants and advisors. This is at a preliminary stage at current moment, and we shall engage with our partners KWE and plan next steps. At the same time, we would also keep our investors updated on the steps from here on. The vision would always remain to create value, bringing out synergies from existing capabilities of the group. We also focus on few other ongoing initiatives like launching electric vehicle fleet for the first and last mile delivery, ease of doing business with Gati, improving corporate governance and CSR activities for our contribution towards the society. With this, I would like to hand over the call to Mr. Anish Mathew, our CFO, for financial and operational highlights in Q4 and FY22. Over to you, Anish.
Thank you, Phil. Good afternoon, everyone, and a very warm welcome to our Q4 and FY22 earnings call. I'll take you through the highlights of financial results for the quarter and financial year ending FY22. Firstly, I would cover the performance for the quarter. Our consolidated revenues, including other income for Q4 FY22, stood at rupees 387 crores as compared to 409 crores in Q4 FY21, down 6% compared to same period last year. Our Surface Express business revenue increased from rupees 300 crores to 304 crores in Q4 FY22. Revenue share from MSME and SME and retail accounts stood at 42% in Q4 FY22. Gross profit. Our gross profit for Q4 FY22 stood at 95 CR as compared to 104 CR in Q4 FY21. Our GP margins for Q4 FY22 stood at 24.7%. The margins were majorly impacted by performance in January, which impacted the overall margins for the quarter. The exit gross margins for the quarter are above 27%, which comforts and makes us confident of reverting to ebb mean sooner. EBITDA. Consolidated EBITDA for Q4 FY22 stood at rupees 13 crores, up by 32% year-on-year. EBITDA margins for Q4 FY22 was up by 100 basis points. Realignment of our operations and synergies across verticals with operating leverage play out. We are optimistic of margin increasing going forward. Now coming to full year FY22 performance. Consolidated revenue, including other income for FY22, stood at rupees 1,505 crores, a growth of 14% year-on-year. Surface Express revenue for FY22 grew by 26% and stood at rupees 1,151 crores from rupees 916 crores in FY21. Our ACM revenue stood at rupees 48 crores. Our Air Express revenue stood at rupees 52 crores, a growth of 58% year-on-year. Revenue share from MSME, SME, and retail accounts stood at 43% for FY22. FY22 gross profit stood at rupees 356 crores as compared to 335 crores, a growth of 6% with a gross profit margins of 23.7%. With all our efforts dedicated towards increasing scale and efficiencies, we believe we will be able to increase the margins going forward to a targeted range of 29 to 30%. For FY22, EBITDA stood at rupees 50 crores, gained by 32% compared to same period last year. EBITDA margins were up by 50 basis points, 3.3%. However, our core B2B business, core B2B Express EBITDA margins, GKP stood at nearly 4%. Our focused approach of reducing debt has yielded results. Our debt has reduced by rupees 11 crores for Gati KWE from rupees 166 crores in FY21. Also, our cost of debt has significantly reduced from 9.2% in FY20 to 8.2% in FY21 to 7.2% in FY22. Lower interest costs and approaching to an asset-light strategy will be adding up to the PBT in the near future. We have been consistently providing other key comparative performance indicators in our investor presentations. One can refer that for more details. With this, I would like to open the floor for questions and answers.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is in the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello, am I audible? Hello.
Yes, Rahul, you're audible. Please.
Thank you. Thanks for the opportunity. Sir, just to understand a couple of things. One, on the top line, our express business volumes had a 3% year-on-year growth and 4% degrowth on quarter-on-quarter basis. In fact, the volumes have been in this range of about 250,000 to 260,000 for last 3 quarters or so. So going ahead, how do we look at this tonnage to move in? Just one more observation linked to this. In the previous call, you had mentioned about that we have been working for almost 15-18 months for the restructuring of Gati with regards to various pillars which you have been consistently talking about. And also you mentioned that the operations also we were trying to bring to a level whereby the customer faith is back in the brand and you sacrifice margins for the same. So considering both this, the top line volumes have been in the range of 250 to 65 for last 3 quarters. Plus you had mentioned that we are trying to get back the faith of the customer in the brand. So where do we see today in that journey? Are we done with the operations to the satisfaction of our customer? So from here on we can see
Mr. Jain, we have lost the connection for the management line. Please stay connected while we reconnect the management. Ladies and gentlemen, thank you for patiently holding. We now have the line for the speaker reconnected. Over to you, sir. Mr. Rahul Jain, may you repeat your question for the benefit of the management team?
Sure, I'll do that. Sure. So thanks for the opportunity, sir. And sir, in last 15-18 months post the new management coming in, we have been working on various aspects as has been consistently spoken by you and in the previous calls with regard to various aspects as we mentioned about Gati 2.0. You also mentioned in the previous call about getting your operations back to a level so that the customer faith is back in the brand, which has been such a great brand for last so many years. You mentioned that. So in this journey of getting back the customer, getting the faith back, and where do we stand today so as to drive the volume? Because you mentioned in previous call that once we are done with this on the operation, we see volumes seeing a decent growth. So going ahead in FY23 and 24, where do we see our volumes going? Because another observation is the express business volumes have had a degrowth of 4% quarter on quarter and a 3% year-on-year growth. But in the last 3-4 quarters, the volumes have been in the region of 250 to 265K. So if you could guide us on the tonnage numbers, the volume growth, how do we look at it on the express business? That is my first question.
Okay. So if I were to look at year on year for the financial year 22, we have grown our volume by 24% and our revenue by 23%. And this is basically numbers that I'm giving out for GKEPL, which is the operating express joint venture, right? If you are looking at the consolidated numbers, you have to also understand that there is the petrol pump business in the consolidated numbers, where we had 2 additional petrol pumps in the previous year, which were moved out in the first quarter of the previous year, and therefore the revenue of those two petrol pumps is not being carried on for this financial year. Having said that, we are anticipating this year, if there is absolutely no COVID coming back, we are anticipating a very strong growth for us at Gati. We should grow at least double as to the market growth of the express industry. Even the last quarter of this year, had January not been a bad month, which it was basically because the North India business was absolutely down, and for us at Gati, North India is our largest zone because of the COVID. We would have been a much better exit for the quarter of this last year. So, as far as Gati GKEPL is concerned, we are set, and I think both the exit month of last year and the first month of this year has already shown us very good growth.
Sure. And so, with regards to the SME business, we have been talking about the potential being there in MSME sector, and we have been also working towards that sector as you have been talking about. So in the previous call, you mentioned about that we plan our ratio of key enterprise to SME to retail in the region of 50s to 30s to 20. That is what kind of targets you have been talking to your salespeople for FY23. So how do we look at the SME business going ahead, considering that what I observe from the presentation percentages is our SME business has practically remained flat for last 6-7 quarters. It's been in the range of about 80 to 90 crores. Somewhere in one of the quarters it was at 100 crores. In fact, in the current quarter it was almost down 15 to 20%. So how do we look at the SME business going ahead? Are we seeing some traction over there now?
Absolutely. So when we did the restructuring of our sales force, we have put a lot of emphasis on both SME and retail. And we are targeting both SME and retail combined business to be at least 50% of our total business. We have taken steps within the organization, both from sales resources as well as from marketing budgets being focused on the SME and retail for this ensuing year. And we will see traction in both SME and retail business.
So we see a larger growth coming in from SME segment now, going ahead?
SME and retail put together, yes.
Sure. The last question, sir, with regards to the gross margins. So good to see improvement on the gross margins in the current quarter. And we have been guiding about 29-30% margin in FY23. So can we see a good improvement going ahead, take quarter one with some sharp improvement?
So yes, we have worked upon the network centralization, which I spoke about a couple of quarters before. Our single largest direct expense is the network cost, which is basically our line haul and feeder cost, coupled with our pickup and delivery costs. Both these put together are almost 65 to 70% of our direct costs. So these definitely we are looking at optimizing them, and you will see us reaching our targeted goal of 29-30% this year.
That's quite helpful, sir. Thank you so much and wish you all the best.
Thank you.
Thank you. The next question is in the line of Ankita Shah from Elara Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, wanted to understand more on the KWE margins. If we just, compare with peers, I think employee and other expenses is a huge expense for us as compared to peers. So, are we taking any specific measures on these two segments which can help reduce the cost?
So over the last 15 to 18 months after All Cargo took over, there has been a huge reduction and optimization of the employee cost. For us as an organization and as a group, the ethos of compliance and governance is very high. The way we would like to increase our margins, and I'm sure you're looking at increasing the EBITDA margin by asking me this question. We would, as an organization, want to do that by increasing our volumes and revenue so that we can leverage the existing employee costs.
Okay. Got it. Also, one question was on the assets that are held for sale. What does that include, and is there any further diminution in value of assets left? And in case of exceptional items, provisions related to any other old subsidiaries which are divested or are non-core, anything that is still pending and that can be expected in FY23?
I will let Anish answer that question. Anish?
Yeah, so we have taken for this current quarter, 5.4 crore rupees on account of this diminution on account of the asset which is moved from the PPE to asset held for sale. Apart from this, entry of 5.4, no other diminution which would happen because most of the assets which we intend to sell has been categorized, barring few assets.
So, largely, what are the assets in the assets held for sale?
Can you just repeat the question?
Which assets are there in this asset held for sale?
Well, we have mostly land. Okay, there are a couple of properties, 3-4 properties, which is basically been given as a collateral to IDFC. There is a case pending actually with IDFC. So, barring those 4 or 5 assets, we have classified everything into AHS.
Okay. And by when can we expect this to get monetized?
Well, I think we are in the process. We are in the process of kind of discussion with multiple vendors, and I think since the assets relates to land and building, it normally takes longer time. But we hope to kind of get most of the assets liquidated during this quarter. But having said that, one it's very important to know that selling land or building is not that easy. And we also would need to kind of look at, really optimum price. So we have to recalibrate internally, before we kind of dispose of the assets.
Okay. And one more, what is your gross debt in Concall and KWE subsidiaries? That number?
The gross, 1 minute. The gross debt is around 160 crores.
In 160 in
155 crores. This is including the public deposits plus the normal working capital loan.
This is on Concall.
This is on Concall basis. So in fact, the loan is basically in the Gati KWE. Gati as a standalone is having a cash surplus of around 10 to 12 crores.
Okay. So largely this is in KWE.
Yeah. And on a year-on-year basis, we have reduced the loan. I think we have repaid close around 15 CR on a year-on-year basis.
Got it. One more on the FCM segment. Why have we seen a decline in the supply chain management business for the year?
So basically, there are a couple of businesses in the supply chain segment that kind of contracts got over and We have not been able to renew them. At the same time, there was a pipeline which got converted. So you will see the revenues of the new pipeline come back in the first quarter of this year.
Okay. Okay. Sure. That's helpful. I'll get back in the queue for my question. Thank you.
Thank you. The next question is on the line of Rajat from iThought. Please go ahead. Rajat, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Deval Shah from DVS Capital. Please go ahead.
Yeah. Good afternoon. So my question is more regarding to the charges which we might have taken hit, I believe, in order to defend our market share. So I just wanted to get a sense on that. So are we undercutting ourselves, competitors to defend our market share, and what is the strategy on that?
So our strategy of market share is never going to be and will not be undercutting competitors. Okay, we believe that there is a large market in the business that we are in. We do two kinds of growing of market share. Number one is trying to convert the unorganized market to the organized market, and there is a huge amount of unorganized market out there which we convert. The second is based on our brand reputation and service, of course, convert business from competitors by giving them value-added services. We provide our customers a very high standard of governance in what we commit to, and therefore these are the two ways that we want to grow our market share.
Okay. And my second question is more on your competition. So the recently listed company, they have spoken high about their technology capabilities. In fact, they have gone to say that they have almost more than 500 professionals from the field of engineering and data sciences, and they've also created the mesh infrastructure. So they are speaking a lot about that technology capability. So how we are positioning ourselves in this particular space, in this competition. Just wanted to get the sense on your thought process on this.
So Gati has been on its own digital journey over the past 18 months now. We have introduced a lot of digital processes. I can name a few. We have introduced digital payments. We have introduced the Genie, which is a bot service where you can on WhatsApp itself get your tracking and queries answered. We've also included Salesforce both for our sales as well as our CRM, and we are also going to be embarking upon our back-end operating system to be digitized. We are also looking at talent being brought into the organization. We already have a pool of talent with a few of these data analysts and engineers who are sitting day in and day out and helping us with our digital journey. So in short, Gati has recognized that we have to get ourselves digitized and kind of that's the only way that we will be able to make sure that our customers are satisfied.
Okay. And sir, my just question from your earlier answer. So when we are saying that we are targeting 50% business from SME and retail, so wanted to understand, so how SME and retail, we are key. So any difference on the margin profile or the stickiness of the business client? So how they are different in a sense?
So basically, the SME and retail segment goes deep into tier 2, tier 3 cities. And from an operational point of view, Gati has a very deep network where we can today enable these SMEs and retail by picking up their shipments on time and getting them delivered. We are using this network to make sure that we reach out just the way we have been delivering for our key accounts and our strategic accounts deep into tier 2, tier 3 cities. We are now strategizing on picking up from these tier 2, tier 3 cities where most of the SMEs and retail lies. This is a concerted effort that has been put in, and we'll see results coming out soon.
Thank you so much, sir, and all the best.
Thank you.
Thank you. The next question is on the line of Avdut Joshi from Newberry Capital. Please go ahead.
Good afternoon. Thanks for the opportunity. I have two questions. We are expanding our reach in different cities through this rented warehouses. I just want to know how the mechanics works over there about the rentals. When is the increase in rentals? Because increase in inflation, the building cost of that warehouses might have gone up, and whether it will be reflected for us also in rental form. That's first question. And second question about the cash flow from operations. When I look at cash flow from operations, it has turned negative because of the receivables. If you can throw some light on that. That's it. Thank you.
Anish, would you like to take that?
Yeah, so I can go with that cash from operations here. Yeah, cash from operations is positive. However, we had blocked the capital in the receivables. Receivables have increased by 55 crore rupees. We have kind of put a good system in place right now to kind of bring down the DSO to kind of a benchmark level. We've kind of made some organization restructuring wherein the collection team would be reporting into the finance as against the earlier structure of reporting them to the sales team. So I think with this structural change, we would be able to kind of bring more robustness in the process, and I think we should be expecting a much better on the debtors going forward.
So what could be the timeline for these receivables coming down, and what level would you like to have it at?
Well, currently the DSO is the 66. We would like to kind of bring down to kind of in the range around 50-55, and we expect that to be done in first or second or max by third quarter.
Okay.
And on the first part of your question, while we are looking at setting up STCs, these are our basically our transit hubs as we call them. Yes, we are moving from some of our owned properties to leased properties. But I suppose the Ind AS accounting takes care of assetization because these are long leases of 8 to 10 years that we take positions in, and therefore the adjustment on your both EBITDA and PBT takes place on the calculations that Ind AS provide. Having said that, the whole idea is to create capacity for the future so that when we start, or rather when we have already started growing our business, we don't have any jams into our hub as has happened in the past, maybe in the month of October of last year when we saw a little rise in volume during Diwali.
Okay, understood. Thank you. That's it from us.
Thank you. The next question is from the line of Rishabh from RS Capital. Please go ahead.
Hello. Yeah, hi, good afternoon. Hello, am I audible?
Good afternoon.
Yeah, hi. Sir, Gati, it's a renowned brand. Coupled with the data that we have from our customers, so long, and given a deep presence and focus, what are the challenges you see in achieving the targets that you set for yourselves currently in current situation?
So, there are a couple of challenges. One is, it's become a VUCA world now out there. You don't know when COVID hits back suddenly, and like I said in January, what happened to us because of North India coming to a standstill. And then there is this fluctuation that keeps happening in the fuel prices. Suddenly you increase the fuel price by 10, 12 rupees and suddenly you reduce it by 7, 8 rupees. And there's a lot of convincing that needs to be done with both our trucking partners as well as customers. So you're just about doing one convincement and another thing happens and you're kind of going back convincing why you do not reduce. Having said these two things, for Gati particularly, the challenge that I face is that my infrastructure growth has to be much faster, because as I grow my volumes, my current infrastructure is not having capacity enough to take that volume growth. And therefore, we're looking forward to our super hub in Bombay and Bangalore happen soon, so that at least 3 regions and big markets get covered fast. We have seen a tremendous change in our north operations after Farrukhnagar has come in, both from process as well as cost optimization. And we look forward to Bombay and Bangalore happening soon.
Okay. And secondly, to fuel our ambitious growth plans, how much additional capital would be required, or it will be fully from internal accruals going forward?
This will be fully from internal accruals moving forward. We are an asset-light company, and we will make sure that all our growth is fueled by internal accrual.
Okay. And the last thing I just want to clarify, we have done a lot of cleanup expenses in terms of one-time exceptional expenses. So going forward, we see more of this, or this is the end?
Anish? Hello, Anish?
I'm sorry. Yeah, I was on mute. I'm sorry. Yeah, I think we have seen the end of all the exception items. Almost all the major exception items have been kind of provided for in the books.
Okay. And also this income tax and this pending case. So what is the status on that?
Well, are you referring to the contingent liability?
Yes.
Yeah, contingent liability related to the, I think you're referring to the goodwill.
There is a Marinda case you mentioned, 22 crores somewhere.
Okay, that's related to the provision which we have made for the quarter, right?
Yes.
Yeah, so there are 2 items to that one. That's a 22.4 CR of exceptional item. One is the GST provision which you have made, that is for 17 CR. And the other one is related to the devaluation actually of your asset which you have moved to asset held for sale. That's a 5.4 CR.
Okay.
So this is not income tax. This is basically indirect tax related to GST. And this is
one more direct tax Vivad se Vishwas you put up a note. So that is settled completely.
Yes, that we have paid off completely. So there is no item with respect to Vivad se Vishwas scheme which has been booked as an expense in the current year. We have booked all those as an exceptional item in the last financial year, and which got paid off during the financial.
Okay. Thank you so much. All the best.
Thank you.
Thank you. The next question is on the line of Harsh Janwar from Centrum PMS. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, I wanted to know, are we planning to merge the APCI division of all cargo with Gati? And if yes,
sorry to interrupt, sir. We are not able to hear you clearly.
Hello, is it better?
A little better. Please proceed.
Yeah, I just wanted to know, are we looking to merge the APCI division of all cargo with Gati business? And if yes, what is the key reason behind it?
So as I said in my note, the board has approved evaluation of restructuring options and appointment of consultants and advisors. We are at a preliminary stage just now. Of course, if you ask me conceptually, contract logistics and express logistics go hand in glove, and customers more and more want a single operator who can take end-to-end fulfillment of their finished goods. So we are evaluating this. We have a partner with us, KWE, and we will be in discussions with them very soon.
Okay, thank you, sir. That's all from my side.
Thank you. The next question is from the line of Ronald Sioni from Sharekhan. Please go ahead.
Yeah, good afternoon, sir. I had few questions like you alluded about 5 to 7% price hike. So recently there has been a fuel price cut also. So in that kind of situation, when you see fuel prices coming down, would you be able to take price hikes with the customer?
So basically, we have a fuel mechanism with our customers. When the fuel goes up, the mechanism kicks in, and there is a formula with which the hike goes up. And when the fuel comes down, similar mechanism kicks in and the price goes down. Having said that, this is not 100% with all customers. There are many customers where we have to negotiate, and then we get on to a price hike or a price reduction. Since in the past 2 months there has been considerable fuel hike, we have kind of negotiated with a lot of customers and brought certain hikes. I think with this current reduction, we will be waiting and watching what happens next before we take any kind of decision.
Okay. Okay. So that would much more depend on the movement of fuel prices and your negotiations. The second point was that if you are seeing volume growth to more than double versus the industry growth of express, even if we expect a 15% growth in JK EPL and gross margins at 29%, while other costs remaining as it is, then its margins should near around 8%. So do we see such kind of operating margin flip from say 3.7% in FY22 to 8%, or would it take 2 years or so to reach 8%?
In fact, I said at the beginning, I answered one question where I said 9 to 10% end of the year.
Okay. Okay, great. And other thing on the other income portion has been high during the quarter, similarly for depreciation. I understand depreciation would more be of an Ind AS impact because of higher leasing or leasing, and same with interest expense, I hope. But why has been the other income higher during the quarter?
Yeah, and the other income is higher on account of write-back. So we had around 7 CR of write-back, old payables write-back. So that's the reason for the change from 2.25 crore rupees to 10 CR.
Oh, okay. Thank you very much, sir, and best of luck.
Yeah.
Thank you. The next question is on the line of Alok Deora from Motilal Oswal. Please go ahead.
Hi, good afternoon. So just wanted to get a sense on how is the demand shaping up in April and May so far, because what we understand is that the demand has been a little soft post March. If you could just indicate on that part, the SME demand as well as demand from the e-commerce side. Thanks.
So at Gati, March, April, and continuing in May, we are seeing the demand pretty high. It is growing and growing by the month. So that is what we are experiencing at Gati. Now, one could either say that we are taking a larger share of the market or the general demand is high. I cannot comment on the general demand just now because different industries are going through different cycles. But for us at Gati, we are seeing growth.
Sure. And any change in, if you look at e-commerce driven, any mix you can highlight on where we are seeing higher?
I think I have consistently spoken about this, that we do not do B2C e-commerce business in Gati. We only do B2B business.
Sure. And just one question. So this diesel price change, so what we understand is, so this price hike will happen when the change in the freight rates, you take every start of the month, or how does it actually work out?
So we look at freight rates on a fortnightly basis in Gati.
Sure. And the suppliers which we have, like the fleet operators, they would also be revising it at that point of time.
Right.
Oh, okay, that's all from my side. Thank you.
Thank you. The next question is from the line of Rajat from iThought Financial. Please go ahead.
Hi, am I audible?
Yes.
Okay, thanks. So what were the utilization levels in surface business in this quarter or the full year?
So our capacity utilizations are measured in various ways. We have capacity utilizations in our line haul, we have capacity utilizations in our feeder, we have capacity utilizations in our hub. But I can only tell you this, that quarter over quarter we have been increasing our capacity utilization and we will continue to do that.
Sure. There is a metric called DIFOT, delivered in full on time. Where do we stand on that metric? How is it compared to the last year?
I think our DIFOT in the last quarter of the year has been far better than the previous 2 quarters. And that's one measure which looks at end-to-end service result. As an organization, we use DIFOT as an internal measure. Unfortunately, earlier Gati used to give it out as an external measure. We are going to move from DIFOT to a time in transit measure for the external world.
Okay.
But like I said, our last quarter DIFOT has been better than the previous 2 quarters.
And on a full year basis, how was this FY22 compared to FY21?
Better than FY21.
And how much room do you think there is to improve this on this metric, or have we broadly reached our optimum levels?
No, there is still good room to improve on this metrics, and this is one metric where you continuously have to keep innovating and optimizing and improving.
Sure. Sir, the other question was on the realizations. So if we simply divide the revenue by the tonnage that we did in surface business, so I think realizations have dipped in this quarter. So any particular reason for the same?
Mr. Rajat, are you done with the question?
No, I asked another question. Can you hear me?
Sorry, I didn't get the other question.
So I was saying in this quarter our realizations have dipped on sequential basis. So what is the reason for the same?
So basically, like I said, for the month of Jan and early Feb, our largest market and best realization is from North India, and that's why you see a little dip in realization this quarter.
Okay. And sir, with regards to Air India, what kind of liability may come upon us if we lose the case?
Anish?
We don't expect any liability. I think, we have won this appeals in multiple forums.
Okay.
I think the case was awarded in our favor. So at this point in time, we even have not made any provision because the chances of winning after this case is very, very high.
Okay. Okay, sir. All right. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Dipesh Kashyap for his closing comments.
Yeah, thank you, Phil sir, for giving us the opportunity. I think, Phil sir, if you have any closing remarks, please go ahead.
So I'd just like to again thank everyone for joining the call. We will keep updating the analyst and investor community on a regular basis for incremental updates regarding Gati. I hope we have been able to address queries. For any further information, kindly get in touch with our investor relations team. Thank you once again and stay safe. Thank you.
Thank you. Ladies and gentlemen, on behalf of Equirus Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your